Welcome to Lineup Stocks. I'm Will. Today is March 3rd, 2026. The market is very exciting today. Let's look at what happened and whether this is the start of a market crash. If I have to summarize today's market in one sentence, I would call it inflation fears caused by US-Iran geopolitical tensions, plus liquidity stress from South Korea. This channel doesn't discuss politics. We only evaluate how news affects the stock market. The turmoil in Iran is definitely a Black Swan event. It caused panic and pushed up oil prices. This led to a stronger US dollar, which pulled down almost all major assets, even gold. The turmoil didn't make gold go up. It actually went down. This is why we saw a messy market today. Especially in the morning, all sectors and all stocks were falling. But around 11 or 12 o'clock, we saw a rebound. Some stocks even turned green. I have to start today's story with oil. The conflict between the US, Israel, and Iran caused oil prices to spike and then drop quickly. Yesterday, the stock market had a big overnight rebound. It kept going up until the close, and gold also did very well. But oil spiked and dropped. This is very important. Yesterday, there wasn't a huge panic because the market thought the strait might just be closed temporarily. But last night, after some news came out, people realized the strait is really closed. So, oil started a huge rally today. This huge rally will lead to a few things. First is the fear of inflation. Energy prices are up. You might have heard that electricity prices in some parts of Europe and the Middle East jumped 50% overnight. If energy prices go up, will inflation go up? The answer is yes. If inflation fears go up, will the Fed be less likely to cut interest rates? Let's look directly at the data. We are looking at the probability of a Fed rate cut on March 18th. The chance of them doing nothing is 97.4%. A week ago, before the war started, it was 97.5%. So, not much change here. But if we look at September, in the 3.25 to 3.50 range at the bottom of the screen, it was 38% a week ago. Today, it went up to 41.9%. So, short term in March, no big change. Long term, by the end of the year, no big change. But mid-term, like September, things are shifting. People are putting a question mark on how fast rates will be cut. This is the main reason why the US stock market, gold, and the US dollar are feeling pressure today. Now, let's look at this chart. This is EWY, the South Korea ETF. We can see a huge gap down. For South Korea, this is like their QQQ, a major national index. A 10% drop in one day for this index is a massive crash. If we measure from yesterday's close to today's low, the drop is almost 15%. For a country's ETF to drop 15% in one day is crazy. South Korea's market has been beating all other assets this whole year. So you can expect there is a lot of leverage and speculation here. Many investors were going all in to get rich quick. So a deleveraging event like this is not surprising. This will put huge pressure on market liquidity, especially with the war in the Middle East. This also causes the US dollar index to go up. We just talked about two reasons for the strong dollar. One is monetary policy, geopolitical tensions causing inflation fears. The other is the deleveraging in South Korea. To meet margin calls, they have to sell their winning assets. Those winning assets include South Korean stocks and gold, which have done very well since early 2025. This is why gold is dropping today, even with geopolitical tensions. This alone tells us today's market is taking hits from multiple sides. The US stock market opened low and closed high for 2 days. Looking at the technical setup, the index is on the edge of a cliff. The overall pattern is still trading in a range, but it has reached the bottom edge. Like I said, it's on a cliff, but it hasn't broken down yet. Let's look at the QQQ. Yesterday, it opened low, went up, and closed the gap. Today, it did the exact same thing. Looking at these 2 days, the bulls are fighting hard, but technically, it looks weak. It has stayed below the half-year moving average for many days. However, looking at the weekly chart, it hasn't completely broken down yet. Since the big weekly trend is still holding, we can wait and see how the short term plays out. Look at the S&P 500. Today's candle is very clear. There was a support level around 6,757. It broke below that during the day, but pulled back up by the close. It barely stayed above the half-year line today. Honestly, the overall trend looks quite bearish. The bull's rebound is very fragile right now. Let's also look at IWM. Today, it broke its previous support at $257. It has formed a double top pattern here. The previous gap down hasn't been closed, but it hasn't completely broken down yet either. As I said, it's on the edge of a cliff. Because of the geopolitical conflict lately, the technicals are very fragile. Let's look at IGV, the software ETF. This is an interesting point today. These software stocks had a very strong rebound. This tells me that investors might be pulling money out of other places and putting it into these software stocks, which are relatively undervalued and have lower volatility right now. If a stock moves sideways at the bottom, suddenly drops, and then stands back up, that is actually a bullish signal. Also, look at IGV's candle today. Its high is higher than all the highs from the last few days. So, I think a bottom is definitely forming here. If the market had a huge systemic problem, we wouldn't see this kind of strong performance in any specific sector. Microsoft is also interesting. Even though QQQ was so weak today, Microsoft still went up and made a short-term high. It looks like it has a bottom structure. Right now, the index is just consolidating in a box, and it might pull back even more. For the Nasdaq, I think a deep crash is unlikely. The index might not drop too much, but individual stocks could fall a lot. At this time, we should switch from high-flying stocks to lower-level stocks. Like I warned in my previous videos, for stocks that have gone up too much, we should take profits and trade less. But for stocks that have dropped a lot, especially those building a bottom, we can start buying slowly. Alright, this is lineup stocks. I wish everyone smooth trading. See you in the next video.